Hey everyone, a quick update video given the volatility that's going on, especially in the tech sector. So I wanted to touch upon what's going on, what are some of those key indicators, and my thoughts on where we are and how should we get positioned. I'm a big believer in position sizing. I like to keep my positions under control, and a lot of my trading is mainly to get my position size, right size my positions. So that's the reason why I sell. That's the reason why I buy, is just to make sure that my portfolio just has that right level of risk, and the right level of exposure that lets me sleep at night. So a lot of news media is covering the rising bond yields. So here's a quick look, a comparison of TLT, which is a long-term 20 plus year bond. That's a US government 20 bond that matures in like 20 years. And it's an ETF of all those bonds. And then I compare it against QQQ, and this chart is very telling on what's going on, right? So the bond price is falling. So this means that there is, this is because investors typically are more hopeful about an economic recovery in the future. And there is also potential spike in inflation. So given all the financial engineering that's going on, this is very much a possibility as well. And this is causing the sell-off in bonds, which in turn is pushing up the yield. The sell-off in bonds is also what in turn is having an impact on the overall market. So the big thing is a lot of money is tied to 60-40 retirement strategies. So fund managers typically need to keep your money invested 60% in bonds and 40% in stock. And as the bond prices fall, they need to sell off the stock to get to that 60-40, which in turn leads to this cyclical, leads to this say the stock price and the bond price falling together. Not a very good sign of what's going on, but this is what's happening. And this chart that shows you QQQ and TLT shows a very clear picture. To set this into context and a slightly bigger perspective on the behavior of TLT in general, this year has been pretty horrible for the bonds, especially the long-term bonds. As you can see, TLT, the ETF that tracks 20 plus year bonds, is down about 10.5% year to date. That's pretty significant. Looks like bonds definitely entering into like a bear market territory. And bonds generally have been on a decline even for like the last year. So here's a chart. If you can look at TLT over the year or so, the TLT has just been on this trajectory downwards. Last year at the same time it was at 166. Today it's at 139. So the yield's definitely going higher. Yield is the return that you get on an annual basis, which is paid typically on a monthly coupon. So it's now up to like 1.5% that you can get on a treasury bond. And in turn, this is also causing a little bit of an impact on the US dollar. So here's UUP, the ETF that tracks US dollars against a basket of currency. We can see that for the year it's up over 1%, which is pretty incredible. And generally the US dollar has been on a downtrend. This is possibly because of all the financial engineering, all the new fiscal and monetary stimulus. So dollar has generally been on a bearish trend, and suddenly this year it's just kept going up. So a lot of these factors are causing all this volatility in the market. There's the volatility is transferring into tech stocks, into growth heavy stocks, which is why we are seeing them constantly dip. So my suggestion is, I'm not sure if it's still a time to buy it. I'm just waiting, watching what's going on in the market, keeping some cash ready for eventually a good buying opportunity. Obviously, I have my core portfolio that I trade around, and part of that portfolio I'll keep readjusting on a daily basis. So I'll be making some trades here and there just to right size my portfolio. But here are my thoughts. I would be watching the bonds very closely. I would be watching the market index funds very closely. I would also be watching dollar and gold very closely just to see what the trend is. Just the bond and the stock and the gold all being on a downtrend is not a very good it's not an exciting time to be in, especially if you're a bull. So right now it's wait and watch. We wait for a trend reversal and a confirmation before making any major trades. But for now, it's just readjusting my positions and waiting and watching. See you in the next video.